The problem is the fiat currency system. I'm not going to beat the push about how the gold standard is good, how the fiat currency standard is bad. It is a part of the normal discussion. But I want you to understand a very important aspect of your life which you go through each and every other day, which is the expectation of the value you expect from a transaction. So it is all about that. One thing you need to understand is that our economies grew enormously when the fiat currency standard actually got in the way. Yeah. Since 1970, the US economy actually boomed a lot. Globally, the GDP actually grew as always, but the problem here is that the real GDP, which is the GDP after cutting out inflation, is actually not booming much more than the era of gold standard. Yeah. When there was a gold standard, the GDP was booming more realistically. What does that say is that the problem lies under the debt economy. Actually, we also know that in the gold standard era, the inflation was not much. Okay, it was just about 0%, and very much of the time the economies were in the depression and there was deflation. To solve this problem, the US actually, to just further thinking of this video, actually just dropped a standard. Okay, let's say. So they just moved towards the fiat currency standard, and after that, each and before some countries already had that, and after that, each and everyone just moved fair. But the problem is that the fiat currency standard actually invites a bigger problem, which is the fake growth. Okay, the growth we actually experienced is kind of extremely fake because it is actually rooted in the debt system. Because every other business in the developed economy, people are more focused to get the debt from the bank and do the business. They're not going to do that on their own money because of the ownership risks. But it is something which is very problematic at a larger scale because over growth is actually has been derived from this factor of the debt. But this growth actually is on the expense of others because the people who are just giving the money away in the form of the debt, they are just not personally taking the risk of doing the business, but they are shifting the risk toward another person. And the other person is just going to do the business if it runs, it's good. If it doesn't runs, it just gets busted. But the real problem is actually that when every other person is just going to do that, the person who is giving the debt is the bank, and the bank just simply can print the money in the fiat currency system. When this kind of environment actually exists, every other person is just going into the market and deliver the product. Okay. In the process of delivering the product, the business has suppliers and the other people are to which the economic expectations are actually attached. Suppliers actually expect the business to provide the money that they actually created the economic value for the business, and the business actually expects the economic value from the customers because it actually created the value for its customers. Okay, so every other person is just running in that debt economy. The expectations created from this factor are also kind of fake because nobody has its own money at first hand. People use credit card, businesses use business loans, and the suppliers also use the business loans. So what's the real here? So that's what I'm saying, that this fallacy of fake expectations created this enormous amount of growth in the economies across the globe since the past decades. So that's the problem you need to understand. And also the GDP growth, which is just being multiplied every year, also have the real GDP growth, which is after the inflation, is less from the gold standard era. Okay. The gold standard era was a bit depressing period for the businesses because there was much of the deflation at that time. But that era just had some real growth. The growth was attached to the people and businesses themselves. And the growth was not attached to the debt from the banks, which is created by just printing more money. So the fiat currency system actually gave the advantage to the global economy to grow enormously and infinitely. So that's why the money is losing value each and every other day, because it's becoming very easy to get money in the form of printing more money. And that's actually creating a spiral effect in the economies and creating fake expectations between the people. Like, I am here, I expect a person, other person to pay me the money, okay, because I'm just providing a service to that person. And that person actually get the money in the form of a credit card loan from the bank and pay me. Okay. I will expect next time more money or less money, because more money, let's say more money, because there's inflation. And because of the inflation, I expect the more and more. And that's how the GDP is going actually. Because the inflation will be caused by the easiness of money being available in the market, because every other person will have the money in that sense. And in the developed economies, it's actually true. So the inflation will get rise up and up and up. I will expect more money in the future for the next service provided. So that's how the GDP is actually growing. I think this is a problematic thing. I think if we think from the perspective of the gold standard, because the gold standard was a kind of a stable system, but it was also very harsh to the growth of businesses. There was a cap on printing money, which is based on the cap of the limited supply of the gold. So that's what actually makes them reasonable for the real and core growth, but it's also not so viable for actually growing the economy endlessly. And we people just got used to this problem, and our governments are actually used to this problem of debt to grow their economies endlessly. But also, whenever there's a shock to the economy, whenever there's a war, let's say, or pandemic, there is a problem that is also related to the debt economy, is that because the people just take on more loans, because the interest rate just get to zero sometimes most of the time in these debt situations. So they just get the money and put it into the stocks and the assets. So this actually inflates the assets. Okay, I know the banks have to make the credible loans, but the people who are credible enough, they will get the loans. They will just put that money in the assets and they push up the asset prices in the economy. That is actually stressing that the economy is actually growing. But in reality, the real businesses are being shut down. And that's another problem which is related to this debt-based economy, which we have faced. And also, as I said, that our expectations are also fake in this economy. We cannot just say that we expect a true value for what we are trading over time, but we are actually expecting a value which actually depreciates over time when the liability gets fulfilled. I think you got my point. So yeah, subscribe to my channel so I can put up more stuff like this. Bye.